market's been pricing in a lot of bearish news, and you can see that reflected in price action. Really, participants within the grain sector are looking for big numbers. A lot of those funds, those big funds, have probably already sold.
If you look at the inflation side of things, historically, oil has been a better gauge of inflation than gold has. So, if all of a sudden oil starts to break out to the upside due to rising inflation and maybe not so much the supply-demand fundamentals, you could see that movement or that next undervalued commodity.
I've seen, over a $20,000 move per contract. That's why you really want to take a proactive approach as far as looking at position sizing and then also look at the available contracts out there.
Well, we did hit a range extension last week, started to come in. The long-term fundamentals are still here. The Fed's not hiking rates until 2022. They are emphasizing more stimulus needed.
I think a large part of this is probably short covering from funds, especially in that corn market. Generally, big crops get bigger, but we had a massive storm roll through the Midwest here this week that has the potential to do a lot of damage. October feeders is going to be where a large part of the volume is, and we're up here at 150. These are levels that we haven't seen since back in February.
We continue to see the demand increase while the supply be reduced on the LME and also on the Shanghai stocks. So we've seen this money flow into the system, and what it's done is it's created underlying inflation.
It's been a big week here for the metals. Markets fall twice as fast as they rise, and then also corrections are healthy. We got both those in both those markets.